Hey guys, good morning. Good morning, good morning, good morning. If you're joining me for the first time, don't forget to subscribe to my YouTube handle so you stay connected to what we're doing. Hey guys, good morning. Good morning. If you're just joining in, I'd like you to type your name in the comment section and let me know where you're watching me from. It's been a while. We actually did something in here and I wanted to stay in touch with you guys today. As the beginning of the week, second week of the month of September 2025, it's going to be an amazing week. It's going to be an amazing trading week for all of us. Okay, so just type in the comment section your name and where you're watching me from. Type your name and where you're watching me from. You can as well you can share the link to this live session. You probably have some friends that okay, so I'm seeing your comment in here. Ooh. My friend from Uganda, Peter, thank you for joining. Mutai from Nairobi, Kenya. That my friend from Uganda. I think we should have a meet and greet in Uganda sometime next upper week. I think we're going to be in Rwanda this weekend. Then by next week, we're going to find a way to get into Uganda as well. Gideon from Kenya, thank you for joining. Raza from Pakistan. I guess you guys didn't miss my analysis on YouTube live session. That's why none of you have reached out to ask why I haven't been active on YouTube. I guess you did not miss me, but that's okay. Okay, so today I'd like us to start with looking at the economic calendar of events on forexfactory.com, just so we are ahead of the market. We get to know what to anticipate in terms of the high and medium impact news events. So you just check the economic calendar, go to calendar and study the high impact or medium impact events that will likely occur during the week. And as you can see, today being Monday, we do not have any high impact or medium impact on the economic calendar. This is a typical sample of a low volatility day, a day where you have no high or medium impact news events on the economic calendar. Price action will most likely play very slowly. So reduce your expectation if you are trading in today because you have zero high or medium impact on the economic calendar. The high impact is represented by a red box. The medium impact is represented by the orange box, and then the yellow boxes signify low impact expectation. Then on Tuesday, we have zero high or medium impact, especially affecting any dollar or dollar associated currency. On Wednesday, you have CPPI or by 130, and then CPI also. So we have CPI on CPPI on Wednesday and CPI on Thursday. So it's going to be a very, very crazy week. Price action will most likely consolidate will most likely consolidate until the release of the CPI. From experience, we do know that once the CPI, price action is going to consolidate, create whipsaws, seek and destroy patterns. It's not going to deliver the way you expect until CPI news release. So we encourage beginner traders to stay out of the market once it is a day to CPI. So if the CPI is coming on Wednesday, by Tuesday trading session, the New York trading session of Tuesday, just forget about trading and come back after the CPI news release, except if you are going to trade the news event, which I discourage beginner traders from trading NFP, FOMC, and the CPI. You don't want to put your emotion and money, to experience the roller coaster. So once that is settled, you now go to the dollar index, the dollar index being the main driver for dollar and the dollar associated currency. You want to study the dollar index and, fathom where the directional bias is from the higher time frame using simple top-down analysis approach on the higher time frame. You want to really, study the higher time frame directional bias, and you're going to be doing this using three things: the monthly, the weekly, and the daily time frame. And you're studying where price has traded away from where price is currently and where price is trading to as the potential draw on liquidity. Okay, if you look at the monthly time frame here, you can clearly see that price had traded away from an area initially, the premium mitigation block, residing right above. When you measure the range between the high to the low, price is traded into that premium mitigation block. Then we had that displacement, some level of consolidation, price action, sweeping the highs of consolidation. I say this is typical power of three concept playing out on the monthly. Accumulation or consolidation, then manipulation while retail are going for long orders. Institutions are actually finding resistance at the bearish order block residing above. You see that again. I emphasized sometime that a bearish order block is valid, or an order block is only valid when it is created upon support and resistance levels. So we see this bearish order block created after price had traded into the bearish mitigation block. So that's what makes the bearish order block a very valid and a strong one. Okay, because it was created after price had traded into the bearish mitigation block. So price found resistance again at the bearish order block, and look at the displacement that happened. It tells us that we are in a bearish order flow. Okay, but although we are in a bearish order flow, we also understand that price may not likely just deliver from start to finish. Price will create expansion, retracement, and continue into the draw on liquidity. Where am I looking to see price trade into? I'm looking to see price trade into this deep discount bullish mitigation block residing right below. I want to see price trade into that area, and also the relative equal lows right there. These are potential areas of drawn liquidity that I want to see the dollar trade into should we continue bearish. So, but what is the current order flow? If you look at the current dealing range between the low to the high, it looks like we are already in a discount, and price action may likely trade up into premium before we sell again. So if we use our Fibonacci to simply outline that trading range, and let's see what is happening. So you can see clearly between the low to the high, 50% of the range there is the 0.5 there represents equilibrium of 50% of the trading range. Okay, so We want to see price action trade up into that premium, then it creates signatures to short into the discount. Because we're already in a discount, that's not a good point of interest for you to sell. You want to stay patient until they bring it up to you again, then you short. And also because price traded into a discount bullish order block by the left here and created a bullish order block. This bullish order block will likely create support for price action to trade up into the internal range liquidity. I'm talking about the fair value gap in here. I want to see price tap into that fair value, this fair value gap, and create signatures to short into that discount. So I'm going to be patient and be looking for longs at the moment. When you look at the daily time frame, also, there's a reason why price action has not been selling. There's no momentum to sell. Look at the number of weeks price has been consolidating around a bullish order block here. Why is it so? Because we see price trade into that discount mitigation block because we've seen price action created failure swing shift of structure, and right in there was a tiny fair value gap that we once called as the draw on liquidity. I remember when we mentioned we wanted to see the dollar tap into that area, and of course the dollar delivered as forecasted. So we've seen the dollar traded into that area and created a bullish order block. Okay, this is letting me know that we are anticipating some level of bullish pricing into the internal range of the monthly, especially if this bullish order block is not violated. My bias is still bullish. Okay. My bias is still bullish. If this bullish order block is not violated, I still want to see the dollar trade into the internal range liquidity, and on the weekly you can see the structural high right there, the old high, and also the fair value gap right above the bearish order block and the fair value gap in here. You see that? So all of that can serve as the draw on liquidity. This is what I'm thinking anyway. Okay, I know some of you want to sell, but as long as this bullish order block is not violated and we do not have any bearish order block, you can see even though price are traded into the bearish order block here, we do not have a confirmatory bearish order block here. Why is price action rejecting at this bullish order block? Look at the last week price traded into the bullish order block. Do you see the level of rejection in there? It is sending a message. It is a narrative. You must look at price action, from the standpoint of the narrative, not just structure, but what is the narrative behind the formation of this institutional reference point. Then on the daily time frame, we want to see price create structure in line with order flow, and since we are anticipating the monthly time frame is going to trade into the internal range and has created the bullish order block on the monthly, you can see even on the daily, structure has changed from bearish and we are now bullish. Market structure has shifted from bearish to bullish. Why? Price was initially creating lower low, lower high, lower low, lower high, lower low, lower high, and then we had shift of structure bullish. The moment we had that impulsive price delivery with the candle body closing above the last structural lower high, that is a break or shift or change of character. Okay, and once that happens, you're not just going to start buying, you're going to wait until price returns into the internal range in efficiency, the fair value gaps, the order blocks, price traded into the bullish order block right in there. Also, look at what has been happening. Price was consolidating initially, and while it was consolidating, it was creating structural liquidity. Price swept the lows there and tapped into the bullish order block. Should we see a 1 hour shift of market structure at this point, that's going to be a confirmation for me to go long on the dollar. While I'm going long on the dollar, I'm going to be looking to go short on foreign currency. So what do I need to see? I just need to see a shifting market structure bullish. Okay, so you can see clearly price traded below that low, traded into the bullish order block. And let's see if what we have here some of us who have some level of trading experience can consider this as structure shift, and we want to see price trade into that internal range before we buy. But I'm also considering today being Monday, and from experience, price will always want to take out previous week's low. In a bullish week, price will want to take out the previous week's low before it buys. In a bearish week, price will want to take out the previous week high before it sells. Okay, so since we are close to the low, we want to see what price does around this internal range fair value gap right in there, and the bullish order block right here. I want to see price trade into this area and create a bullish order block as confirmation. Once I see a bullish order block created on this fair value or bullish order block, then that will serve as confirmation for me to go long on the dollar and short foreign currency. Okay, once we get long entries on the dollar, the drawn liquidity, of course, is going to be old high. You can see equal high. The drawn liquidity is so obvious, and look at inefficiency residing above on the 1 hour time frame. All the sell side liquidity inefficiency here would want to be rebalanced by institutions. They will want to rebalance the sell side imbalance, buy side inefficiency. It's an imbalance created on the sell side and an inefficiency of buy orders, so they want to rebalance all of that inefficiency. Okay, I really hope that you understand all of it. So as this is happening, this is the only time we'll be looking to look for, to get entries also on euro. The reason why you do this on the dollar, it makes it easy for you to know the direction of all the other foreign currency. Once the dollar is bullish and ready to start buying, it will only be, it will only be looking for orders on the euro USD. We'll only be looking for short orders. Once it's ready to sell, we are looking for short orders as well on the euro USD. Okay, so that's what we'll be looking for. Waiting for price action to get into that area and get your shots. Okay, so the same way, we're also looking at GBP USD. That bearish order block in there with the fair value gap wants to see a bearish order block as confirmation for price to go lower. You can see price swept liquidity above the highs. Okay, so that is that with the dollar and foreign currency. Then let's look at gold. Gold has been crazy bullish and reaching for all-time highs. You can see that. Gold obviously bullish on the monthly time frame, weekly time frame bullish, breaking new highs, the daily time frame as well. Everything about gold now is buy gold, except that you need to be very careful because of where gold is. You don't have any significant buying gold now is already buying an overbought market. It's buying an overbought market. You want to buy, but you want to see gold retrace at least. I want to see gold create some form of swing high and trade to take out that structural liquidity and into that internal range. Then I'll be comfortable buying gold once it comes back into that discount. Okay, so that's what I'll be looking on gold. Patience to retrace into a discount, then I buy gold. Buying gold here is buying risks because it has every reason to reprice into internal range before it continues higher. But overall, order flow is bullish. Bullish, 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 bullish. GBP, JPY. Interestingly, so this guy has been bullish actually. Of course, we've been calling out a bullish GBP JPY and for quite some time because of the reaction we've seen at the bullish order block here. We've been calling out a bullish GBP JPY on the weekly time frame. Let's see what we have on the weekly time frame as well. It's still very bullish, and we're anticipating to see GBP/JPY trade into that bearish order block. Okay, the bearish order block here was why we outlined it. The daily time frame is structure. We're supposed to study structure. That's going to get us into that point. And clearly, structure as well has been consolidating right now. Price has been really heavily consolidating on the GBP/JPY after the last buy we had here. It's been consolidating, so I wouldn't want to do anything in here because price is actually consolidating. I would like to wait to see price take out the lows and trade into the fair value gap below. Then I will be comfortable seeking for longs. I'll be comfortable seeking for buys when price sweeps the low and trades into that daily fair value gap residing below. Apart from that, I have nothing to do on GBP/JPY because it's not clear. It's consolidating. The only way it's going to be clear for me is I want to see this guy either sweep the low and trade into that fair value gap or break out of this entire range, create some form of order block and trade back into it. Then we start to look for longs. Okay, I hope that someone is asking on the weekly DXY, isn't that a PBR? What does that mean, please? You can just type in the comment section. So I think that will be all for today's session, my friends. So I really hope that you learned something from today's session. This is what I'm looking at on the dollar and foreign currency, and of course also on gold. Don't forget to subscribe to my YouTube handle. And you guys are not even joining the Telegram community. Check the link on the description of this live session. You're going to see a link to my Telegram community. You should join the Telegram community for quick updates. And of course, when we're running discounts for my one-on-one mentorship, which happens to be the most effective mentorship right now, those of you who are seeking for that level of mentorship, should reach out to me and join the one-on-one mentorship. Okay, until next time, I wish you guys good luck, good trading, stay safe.